All right. Good morning, everybody. It seemed like last week I had my numbers wrong. I kept thinking Friday would be the end of Fed speakers and we would go into quiet mode, blackout mode as they get closer to FOMC. They always have that window where they are quiet. But the FOMC is on the 20th, so we wouldn't have gone into blackout mode so quick. And in fact, this week we've got Fed speakers up on Capitol Hill and just speaking. So not in blackout mode yet. I don't know where I got my wires crossed. Spy Gamma talked about rolling up all of the options levels except the put wall, which is really bullish. And they mentioned how some of the options structure is now building support at 5,100 and 5,000, which is just amazing, right? We've got never before seen call wall levels, and we're building support at 5,100 and 5,000. So that's pretty solid. The UK is down the most, Hong Kong right behind that. And then the Dow, what's up the most is small caps. I took a lot of looking around this weekend, and a lot of analysts are looking for small caps to play that resurgence that it's been so long, right? And everything else is run, everything else is crowded. And if we're going to see this everything rally really start to spread out into everything, well, then that means we want to focus on what has been the dog for the longest time. That'd be the Russell, and it's setting up for a really nice breakout. Right, it had that kind of a cup and handle pattern. If you looked at stock charts, anyways, that's what they were laying out, was either a ladle or cup and handle look to it. So if we see small caps get into the game too, then we're looking at, the everything rally finally having everything in it. Be pretty interesting. So today we got Harker and we have some smaller auctions. That's really about all we have for the day. There's not a whole lot. But as we get deeper into the week, we're going to get into more of the unemployment numbers, and we're going to have Powell in Congress. And to me, I always hate this. It's a kind of an earlier morning situation, and they just bully him, right? They go in, they get their talking points, they throw a lot of shade at him, just bobbing heads, accomplishing nothing but getting in their political scoreboard points. He takes his beating, leaves, and then the market finally comes out of a range that it's been sitting in while he was talking, and we get our moves for the day. So we're going to see this twice this week. And I don't know, it just kind of wrecks the whole feng shui, right? The whole mood and vibe of the market gets thrown off for these House and Senate hearings. The good thing is, for people that like to sleep in, you won't have to rush to get to the market so early on those days. We are going to get some data out of Japan tonight. But as you can see, other than the auctions, we really don't have much on the intraday today. That gets us over into tomorrow. We start getting into ISM services and some Fed speakers. Not an overly exciting week. At least not a good, not too much on the start of things. But that's okay too. You know, it's we got a lot coming up. So maybe a calm before the storm isn't such a bad thing anyways. All right, I didn't have Spot Gamma's AM, but I did have the founder's note from Friday, so I posted that. When I get the AM, I'll share it as usual. We can see the call wall up 52.11. We're above the 51.11 cog line. We're above the weekly pivot point and the daily pivot point. We haven't hit either one. It's an MDP, missed daily pivot. It actually won't count until tomorrow, but we find them today, right? We keep track of it for tomorrow. You can see when we retested the weekly pivot point last week, kind of deflected off of it, started working our way back up, how we were starting the day underneath those daily pivot points until Thursday. We finally turned things around. On Friday, we were back above, tested it from the upper end. So we're just continuing that with that theme today. But look how much we moved the weekly pivot point. We brought that thing significantly closer, right? So we kind of back up to where we started the week last week. This was a massive gap up for the weekly pivot point. We managed to keep it and hold it. Just zoom out here a little bit more. I know it gets a little messy. You got to try to hunt for what we're looking for here, but it was down at 5,000. That was the lowest for the weekly pivot point on this fade back. So take it, you know, over here to the weekly chart. We had the market pull back. We had the weekly pivot point coming back in, and now it's been working its way back up. When we're above the weekly pivot point, we have a bullish posture. We want to look for long opportunities, not just in the S&P, right? But I mean, in the broader market, we want to seek out long opportunities. If it doesn't give us long opportunities, like say last night, we're above the pivot point, but we went sideways to down. So it just doesn't give you a trigger. You never get a trade. You're just looking for those longs, but no long presented. I've had people say, I don't understand. You say above this, it's bullish, but price wasn't bullish. It was bearish. It kept falling. Yeah, you're supposed to carry that bullish posture and look for long trades. If no long trade presents itself, then no harm, no foul. We are flirting with the previous week's close, and since we closed near the high, that sets us up with two major pivot points: previous week high, previous week close. We've already ducked down below that level and got into the liquidity. Just keep in mind that that's where the liquidity was, right? So when we were just bouncing on the blue line, it was expected that we would cut through it anyways because liquidity was on the other side. We got into that liquidity now, and there's a new pivot. So liquidity is now below this lowest Globex pivot point. We are continuing this grind to the downside, but it was a very narrow IB. IB is initial balance, like open range. The difference between open range and IB is you don't get to choose. If you're in the RTH and you want to play an open range strategy, you can choose 5-minute open range, 30-minute open range, take time off the table and just use first pivot high, first pivot low. But when it comes to the Globex Open and this IB, when it was first developed, that's where it was. And it was set to 1 hour, and you don't get to make that decision of using a smaller one. I bring that up because nowadays I've seen people talk about the IB and mention that it's in the RTH. There's more modern traders who say the initial balance is in the regular trading session at 9:30. I don't agree with them, but that doesn't mean that they're wrong or that I'm right. I just like the old school one, IB being at Globex, and that we just use an open range in the RTH. Either way, it doesn't matter. It's 1 hour either way. And by the way, if you trade at night, the open range strategy that we do use in the RTH, it works here too. 5-minute open range, 1-minute open range, 30-minute, whatever you want. You can play the open range in the Globex at night, just like you can play the open range in the RTH in the daytime. So that's useful if you're trying to trade in the evenings. But we are consistently grinding to the downside with this very narrow IB. In generic kind of language, the way that they taught IB is that if we have a very narrow range, it implies unfinished business. And we can just imagine, you know, some Joe Schmo lady waiting, getting the call from the boss that says, hey, you know, trade these 90,000 contracts. That's what you got to do today on top of whatever else you're doing today, right? Get these 90,000 traded. In a very narrow range, she hasn't got her job done yet. She hasn't traded anything yet. On the other hand, if we come in and it's a very wide initial balance, if there's been big moves in the Globex and we've traveled a long distance, it kind of implies she got her work done. She got those 90,000 contracts traded. So very narrow range, unfinished business. They're sitting on a lot of trades that need to be done. We want to look for the presentation that they're actually going in there and starting to get that work done for the day. Below our own Globex low here, the next real pivot point is actually the daily pivot. But unless we get some news that's going to send us down there, I really don't see that we're going to make that drop yet. Right now, we're just playing this reciprocation. So measure the distance that we traveled from VWAP and project it to the other side. It looks like we're just going to hold the line and build up energy until something kicks the can and we get moving. That catalyst is going to be hard to spot today. You know, what's really on the table to kick this market into gear? Not much, right? And we can see that liquidity is light. They're not overly concerned or scared about it. They're not hedging. It's kind of a boring Monday. Now, there's two sides to a Monday open and the gap that we get from it. I do like on equities a gap up on a weekly chart. I love a gap up on a weekly. But in the indexes, not so much. I'd rather gap down on a Monday if I want to stay bullish, get a little bit of that move to the downside to gather up some energy, and then come ripping up breakthrough levels and continue the run to the upside. It's not right or wrong, good or bad. I can show you examples where we gapped up and we kept on going, or we gapped down and we just kept falling. But in the indexes, I like a gap down Monday. We're not really gapped down, though, all that much. The gap that we have on the Globex isn't the one I'm looking for either, right? It's how we actually open in the RTH versus where we closed on Friday. That's the gap we're looking for. If we look at the ES on the daily, this is like a mini scoop pattern. We got through all these sellers back here. We're now above it. We should keep it. It's possible that we fade back down into the top of that zone just to check it. Old resistance becomes new support sort of thing. But for the most part, we should keep above the halfback. That'd be, call it 51.20, right? We should be able to keep that level. So we can wick down below there, we don't want to get a candle close below there. $10-day, 30-minute volume profile. We certainly had more volume by time than by price. But on this time frame, it's not enough to really stand out and give us anything. We don't have a classic shape yet either. As we lose more of this volume through the day, we're still going to have this run up, which, to be fair, that run up very likely didn't have very much volume. So we should lose a lot of this volume shelf down here below 5,000 in the later part of the week, unless, of course, we revisit the area. But, you know, if you read through what Spot Gamma said and kind of look at everything else that's going on, it's going to take some serious negative market to get below 50-50. And even at that point, there's still option levels all the way down to 5,000. Only cutting below 5,000 does things get scary, and we can have the potential for a flash crash. But that would be all the way down here anyways, right? So first we'd have to get through 5,100, a lot of structure, 50-50, which also a lot of structure, and then 5,000. That's so much support underneath this that it would have to be really, really negative news. Moody's could do it, I think, but you know, they did get the agreement for funding the government, kicking the can down the road. So I don't see Moody's coming out and doing anything now, right? But that could have done it. What else is left? Hard to see it, right? The 5-day, 5-minute chart that we're looking at always highlights how narrow the initial balance is. And I mean, that's just a really skinny, very narrow IB, right? Really good job visually of kind of laying that out for us. We don't necessarily have a VPOC, but I'm going to bring one up and kind of give the devil's advocate here. So if we mark off Friday, it's close enough, right? So we got our VPOC from Friday. As we got into the Globex in the overnight hours, we gapped up into it and we hit it. We've hit it, therefore it's no longer a VPOC. Later this morning, or later in the overnight hours, early this morning, we ran back up and we hit it again. If we were only keeping it for VPOC, for untouched point of control, then we're done. It's been hit. We don't need to keep it anymore. There's an argument that says it was hit in the pre-market, not in regular trading. That doesn't count. That's not me. I don't subscribe to that theory, but just putting it out there. There's others who say we carry the VPOC until the end of the day. If there was a VPOC that even got started here, it would carry until the end of the day because we want to see how price responds at that level through the day. Sometimes I've done that, and other times I haven't. Depends. There's no wrong way to go with this, but you want to try to stay consistent as much as possible. So while normally I wouldn't keep this, we're going to keep it. I'm going to keep it. Just leave it on a chart. I just want to see how price responds to that level if we get back up there. But it's no longer a VPOC. It's just a POC, just a point of control. We're carrying it forward, but it's been hit multiple times, and it's not a VPOC anymore. It's just a POC. That's at 51.45, basically, if you want to round up a little bit. When we ran up into this level on Friday, we had a hard time digesting and we weren't able to keep it and get through it. Now, that level, whatever peak it was up here at 41.50. It's now lower. The point of control and the greatest amount of resistance that we can point to, or just the greatest amount of trades, happened at 51.45. Buyer's remorse, unfinished business, whatever you want to call it. If we get back up to 51.45, there's very likely going to be a lot of trading. I want to know where that level is through the day, right? Now, that's not hard. If you didn't mark your POC, there was still a pivot point right back here that was made. So you would have that area marked anyways as unfinished business from that zone right there. So even if you didn't do it, it would still be an area that you would mark out because of that. Which is why I say if you're doing your analysis right, you'll often get the same answers from multiple sources. They just validate each other. March 1st was Friday. We got a new month. So we have the door set up, DOOR. It's a day one open range. First day of the month, you mark the highest point and the lowest point. There's a lot of open range strategies out there, and that's what the door is. It's another open range, but the open is the first day of the month, not, intraday minutes. Do a 1 day door or a 3 day door. I tend to favor the 3 day, but even just the 1 day, you're going to want to mark your March 1st candle on equities, highest point, lowest point. On Friday, this box was a lot smaller. So it's still small compared to what we had last week, but it gained some volatility through the day on Friday, which makes sense. But still, here's the visual representation. We can see how much smaller the volatility is this week, how much less volatility there is. We're expecting less movement out of the market. Likely, some of that is due because, well, Powell in Congress is volatility suppressing. We're going to be sitting around waiting, right? For 2 different days, we're going to be sitting around waiting. And it's very unlikely that he's going to say something in Congress. But there's been times in history where policy came out in a congressional setting like this, and supposedly it was an accident. The sitting Fed official at the time misspoke, mentioned something that they hadn't planned on mentioning yet. That's the official story anyways. So it's possible if Powell wants to throw some cocktails, he can. So it's always a threat that something can happen during these meetings, but for the most part, it's just showboating and politics. We're not expected to see any sort of policy come out. We're still 3% above the 10-week. We're on the way back, so we're headed closer to the 10, or the 10 is coming to us. All we have to do is sit tight. If we hold this range, the 10 will come to us, so we'll get our reset either way. Correction through time rather than correction through price. We're 1% above the 10-day moving average. And after nearly a reset last week, we popped up reasonably decent. Now we're kind of trying to fade back again. We're still within the zone here. This has been the average for the year. You kind of see how 1.5 really tops us off. We haven't even got into that level this year, but we've just been kind of holding that nice bullish posture somewhere between 1 and 1.5% above the 10. And that for the most part, through the whole year, we've been above that 10. Very quick dips below the 10, but otherwise holding really good. Nothing's changed on that front even now. And if you look at the moves that we saw last week and thinking we moved too far, too fast, and you want to short it, think again. This isn't overbought. We haven't moved too far, too fast. It doesn't owe us a pullback. We're not overextended or overbought. We're getting to the point on the daily where we could see a pause, but that's another 0.5% away from the 10-day. So I wouldn't try to short it on principle, right? Not just for GP. Financials 5-day change, they're basically flat. The two that did all the heavy lifting in the last 5 days, technology and consumer discretionary. These other sectors were useful or helpful, yeah, but the midline is just that. It'll do good in a good economy. They'll do good in a bad economy to a point. They're the midline sectors, so we expect them to just do their own thing, and it's not a bearishness or a bullishness or a good economy, bad economy, not for these ones in the middle. The bottom three, this is more of your defensive sectors, and we expect them to do better in kind of bearish market conditions or a weaker economy. It makes sense that they're down or flat, not doing as good. Growth versus value doesn't mean one going up necessarily and one going down, just that one can be going up stronger than the other, or one can be going down more than the other. So the name kind of makes it sound like it's one or the other, but a lot of times growth and value are both going up. Growth and value are both going down. Just one's leading, one's doing better than the other. We're a bit extended on the consumer discretionary side, but tech is just coming up through the line. So it seems like it's got room. Well, bonds are down, but really that's it. If our benchmark is 0.5%, then we really got nothing down yet, and not a whole lot up yet either. The fangs are up, semiconductors, uranium, and Bitcoin. It's the same story that we've been seeing, right? So big moves in nat gas, up 7% this morning. Bitcoin 3.5. So breakout continuation in uranium. Semiconductors now that looks a little bit like a blow off top. Yeah, I don't know what to do with that one. If you remember last week, commodities got hit. A little bit of a relief bounce, DBA. And gold is up, or gold miners. Coming into this year-to-date VWAP. No, that's a week-to-date. Here's the year-to-date back here. I guess they're just laid right over on top of each other. Either way, getting through those to 28 would be the goal. If you can get through those, you got this resistance right past 29 to deal with. Gold made some moves last week that has us kind of considering what the impact is, right? Or what the consequence is going to be, these moves in gold. China, airlines, and bonds down. So typical Monday, we want to get into the open, let the market digest the news over the weekend, and kind of get rolling for the week. Use some swag levels like 104.5 on the Dixie, or even just 104.25. We got to get at least that high or above before we're going to see any sort of impact from the dollar on the markets. And for the 10-year, probably 4.3, maybe 4.32. I would use 4.3 at least. Got to get that high up in the 10-year before we start to have any concern about, the 10-year. So those two combined are often reflected with US dollar Japan. Keep an eye on this. Just use a swag level around, say, 151. But really, even getting above 150.5, that's the start of some kind of shenanigans right there. You'd want to start to be concerned. We don't want to see this continue this morning. We're starting to get that breakout here on US dollar Japan. It's not good. Very likely going to see a retest of our own Globex low if this continues. And if the breakout gets, say, above 150.55, then we're going to look to get this gap closed at 150.66 and then break out of last week's high. If we do that, we're going to expect the dollar and the 10-year to break out of Friday's high and start continuing that upside move. That should be high enough at that point to start putting pressure on the NASDAQ and the S&P and send us down to the ADR levels. 51.18 on the ES and 18.215 on the NASDAQ. Slow start to the week, and it's going to be slow mornings with Powell in Congress, but the market tries to get a lot accomplished after he's done in Congress. So should be some busy afternoons at least twice this week. Then we're going to get a lot of economic data in the later part of the week. So it should get more busy as the week goes on. Everybody be careful.